Good afternoon, Zinger Nation. I hope you guys are ready for another Stock Market Movers, our brand new show here, as we go ahead and bring you the headlines that you need to keep the informational edge on out there. So, welcome to Stock Market Movers, where we cover those market headlines. We're going to get into it. I'm your host, Money Mitch. If there's a stock moving or you want it covered, make sure you throw it up in the chat so I go ahead and get to it into the show. On today's show, we're going to talk about the bear market. We'll talk a little bit about some bankruptcies on out there. Travel stocks are getting crushed. We'll talk also about Tesla's 3-to-1 and other catalysts that are going on right now in Tesla. We'll touch a little bit about the cryptocurrency news that's going on out there. And of course, guys, stay tuned right here for your expert opinions. We have a great show on today. We're going to be getting into an interview with Thomas Hayes at 1:15. That's the chairman and managing member at Great Hill Capital. And then a little bit later at 1:45, we'll be getting in Ivan Feinstein. He's a senior partner and chief investment officer and director of research at Tigress Financial Partners. So I got the experts for you. The question is, are you guys ready? Let me know in the chat.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, how we doing on out there? I know it's a little bit of a sea of red, but I'm starting to see a little bit of change here. We're getting a little bit of a bounce. We'll see how long this lasts, but really what this show's all about. Let's go ahead. Let's dive right into it. Let's get into the headlines, right? And so first thing we need to talk about is the bear market out there right now, and it's tough. Right now, we are definitely seeing some new intra lows there. Today, we hit on the SPY. And the question is, we're really right back into bear mode after we potentially were calling the bottom there. And I can't blame people for having that mentality. But one thing that we got to do is always take a look that we can test down the lows. And we really need to see a change in environment. We really haven't seen that last week with our hot CPI coming in. And then overnight weakness definitely coming in the futures market. We hit down all the way down. Let's go ahead. Let's take a look at the SPY and see what we see on our charts. All right, so here's the SPY, guys. We're coming on down there towards 377. We did do a little bit of a bounce there to 380s, but now we're right back below that 380 and that 379 spot. And you can see how we're really starting to come leaking here. And one of the things to kind of draw is that the volume's not increasing into the down move. What it's potentially doing is decreasing. So that could be a lot of people kind of just getting out of the market. You could see it in the chat. The chat is like, well, I'm not touching anything. Can't blame you guys, you know. Zoten saying, how you guys doing? Hope you're surviving. Yeah, it's a tough market out there right now. So definitely the SPY coming down to an intraday low of 374.93. We'll take a look at the daily chart. Where is the next stop for the SPY? And really, I mean, this is no longer a W, so we're just going to go ahead and delete this now. It was a little bit of a bottoming action there, and now it has not held, and you're seeing that flush right through. So where are the next levels from here? The next level for me are going to be down there towards that 360, and you're going to hear this often mentioned around that 360 being the next levels. We'll see if we can get on back there, but definitely back into bear territory today in the SPY. So what are the sectors getting hit the hardest? If you take a look here, you're going to see real estate taking a real hard hitting. And what is this? This is the outlook that you're seeing demand destruction, right? We've been seeing demand destruction because now that you got a hotter CPI, of course, the Fed have no choice but to increase that rate. And then now you're seeing the real estate. They've been mentioning the demand is really coming down there in real estate. And you could see it here on the sector chart. It's really coming on down there from around the 1020s, 1040s, on down there towards the 924s. Stocks like PLD, Prologic, Industrial. Look how this has really turned around. This was looking really strong and now has come from around the 165s all the way down there to the 108, about 36% in about a month and a half. We'll see what happens there on PLD and stocks like AMT, American Tower, really kind of showing that weakness coming right back down there. Consumer cyclical, also really weak right now. Stocks like Amazon, Tesla coming down there over 5% today on both of them. Tesla and Amazon. We'll get into a little bit more of Tesla coming on up here in a little bit, but Amazon also down there towards 101. We'll see if it cracks 100 right now and then starts going down below into the double digits. HD also, BABA down 9.9%. We'll see if it's able to hold that DD push that we got last Monday, but it looks like it's trying to fill in the gap there down there towards 96. We'll see what happens there on BABA. Of course, when this happens and even energy is coming on down today, you're seeing a hard pullback today in names like ExxonMobil. ExxonMobil down almost 4.3% today. Also Chevron down about 3.8 now. This is what we don't want to see. You know, one of the things that I've been noting is that when we really have been seeing the market get hit is when we're seeing the turnaround in energy. When we do see the commodity trade come off, when we do see that oil trade come off, that's when I really have been seeing the downside action, because even the defensives, they're not saving us right now. So we'll see what happens there. Definitely seeing some hard turnarounds. We'll see if this can, is the oil trade completely off? We got to keep on watch. Nothing is written right now, but I'll keep watching there as we definitely are getting deeper into the bear market. Another area to watch today, recently released, was the University of Michigan's gauge of consumer sentiment falling sharply to a record low of 50.2, down from May reading of 58.4. And the estimates were for this June reading, that was at 59. And so it was supposed to go up, but instead we went to a record low here. So showing you that the consumer sentiment on out there is definitely weighing on the downside there. Of course, higher gasoline prices and overall inflation weighing on the consumer's mind. So citing inflation as the biggest reason for their negative outlooks. Another thing that happened is, of course, the Treasury yield rising about 17 basis, the 2-year, more than 3.2 on Monday. And we're really starting to see those yield curve inversions start happening. And when we do see that, of course, what's going to be on our mind? That ugly R word, recession. And with that being mentioned, I mean, let's start taking a look here. There's some weak stocks out there right now. And what have we been seeing more of? That, and it's going to be another ugly, we're going to call this one not the B word that you think, but bankruptcies. Bankruptcies definitely have started. Now we're starting to see Revlon Group coming on out, preparing for to file Chapter 11 bankruptcy protection as early as next week. Wall Street Journal reporting, and also Electric Last Mile Solution talking about how they would liquidate their assets via Chapter 7 bankruptcy process. So definitely not what you want to see. You know, one of the things that we're going to really start looking at are some of these companies really in trouble. And you can see here, ELMS, they were really in trouble. A lot of this having to do with since their founder and CEO departed in February. And you know, Electric Last Mile had their public offering in late June of 2021. This came with the SPAC phase, and I know you guys are probably going to hit me because I was on the SPACs attack covering a lot of these stocks. But this is the first one post-SPAC, EV makers, that you could say is really declaring bankruptcy here. So not the sign that we want to see, as there's a lot of weak stocks out there. And now it comes the concern of which companies really need that cash to stay alive, right? Have that survival period. So we'll keep on watch to see if we get more mentions of that ugly B word, and I'll say bankruptcy. Definitely we'll see what happens there. Not what we wanted to see in Electric Last Mile or Rev. You can see today trading on down there and really getting crushed. Revlon just not looking good. And it also shows us that the consumer is really weak right now, as we're starting to see some retail stocks give us a little bit of upside. but we are seeing some pullbacks on out there. All right, in just a little bit, in about 3 minutes, we'll get into our first interview. Do want to review a little bit what's going on out there. The only thing that's kind of not looking as bad from the open is consumer defensives. I tried to look for some strength on out there. It's really hard to look for some strength out there today. You can see Coke coming on up there a little bit, but definitely it's probably the only one defensive right here, at least from the bigger caps that I have into the green on the day. So I'll keep on watch, but let's take a look here. PG going sideways, Walmart sideways action, even Costco. Costco can't get off after coming down in pre-market significant amount. Even tobacco. I thought maybe tobacco would come on up today. Tobacco's wacko, but definitely not holding on there. Philip Morris, I guess even the consumers letting go of the cigarettes. They're like, you know what? Lost the stocks. Forget the cigarettes. Throw them out. Hopefully that is what's happening, but we'll see what happened in Philip Morris. And if we can continue seeing some weakness here, tobacco definitely turning around. Food distribution turning around. USFD is one that I look at all the time, now down about 3.29. So it's just showing some tough environment out there. All right. Now, the last thing I wanted to get into before we get into some of our interviews, we'll talk a little bit about this coming on up, which is the crypto news. So stick around for that. If you're a big crypto fan, the fallout in cryptocurrencies have been pretty quick. And we'll talk a little bit about what happened there in Celsius Network, suspending withdrawals and transfers. So stick around for that. Now, up next, we're going to go ahead and get into our interview. Like always, we go ahead and bring on the expert opinions that you guys need to keep that informational edge. Really what I want to do on this show, and you guys have watched Money Mitch before, is I do a lot of, going through some sectors, going through some industries, looking for some relative strength, trying to give you guys what I see on out there. But what I really want to do is get to the expert opinions, because that's really what's going to go ahead and light it up for you guys, give you the information that you guys need to have an informational edge out in the market. So let's go ahead. In a second, I'm going to go ahead and play a quick promo here for Pro, and then we'll bring on our guests.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protective connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's go ahead. Let's bring on Tom Hayes here, the chairman and managing member of Great Hill Capital. Welcome back. Well, it's kind of a newer show, but rebranded. We'll say that. Welcome back, Tom.
Good to be with you, Mitch, as always. Thanks for having me on.
Definitely happy to go ahead and get into it. First thing I want to talk to you about something, I'll say it's the vital question of the week, even though I'm sure I'm going to get some complaints about this. So who do you got for the Stanley Cup final?
Oh, unquestionably the Bolts, man. I mean, Tampa Bay, without question. The Avalanche is going down. I know you're kind of, you like the Bolts. All right, that's a good thing.
This is the first time that I've ever, this doesn't happen often, but I usually have two teams that I like. I'm a big Tampa Bay fan, so anything really Tampa Bay, the Rays, the Lightning, I love it. I've been there plenty of times. But I've also, going through the struggles because I was kind of rooting for Colorado because I lived there for a little bit. So,
yeah.
Hey, both teams. We'll see what happens. But I'm going to go with the Bolts. Let's do it.
Yeah, it was very, very simple. I grew up in New Jersey as a Devils fan, so just watching the Rangers miss the ball on that one was a very, very positive experience, I have to say.
All right, perfect. Now, before we get too much there, we'll get it back into the stock market. First thing I want to know is kind of your reaction to the CPI data, the recent data, and where do you think the market is today?
Well, the bad news is it was a train wreck. It was about as bad as you could possibly get. If you thought it was going to be bad, it was even worse. Across the board, you could find no green shoots. So that's the downside. The upside is I'm looking to the PPI report tomorrow, and I don't hear a lot of people talking about it, but CPI often lags PPI, producer price index, come first, and then over a period of months, it finally gets to the consumer. And the reason that I'm somewhat cautiously optimistic about the PPI number tomorrow and the timing of it is, if you look recently, there were three key input costs that have come down pretty dramatically that no one's talking about. First off is PC DRAM prices. Those are down 14% year on year. They're at half the price of July of 2018, and that's a bellwether for semiconductors, which is in everything, including automobiles, which we're going to talk about that in detail in a second. The second thing that's come down is 24% since March, believe it or not, are North American fertilizer prices. No one's talking about that. That will trickle through to the consumer, albeit on a lagged basis. And the final thing is, if you look at the Drewry shipping index, it's down 26% now since September of 2020. So some of that supply chain stuff is easing. Obviously, the number one thing that's been causing all the pain is energy, which is the critical input cost. And the developed world has made a conscious or unconscious decision that they were going to subsidize the defense of Ukraine at the gas pump. And the question is how long will they have that resolve to continue to finance that defense and deal with these persistently high energy prices, which is taking a lot of disposable income out of people's pockets. And on the one hand, ideologically, everyone wants to continue to do that. But on the other hand, the pressure has been on now for a number of months. And Zelensky said as much last week that perhaps Western powers are trying to encourage him to take agreements that he was not really excited about because they're growing weary of the war. So, you can't handicap when that stuff is going to happen. The good news is maybe we'll finally see some relief with the PPI print tomorrow, which will give the Fed cover on Wednesday at the Fed meeting to say, look, the CPI was a train wreck, but the numbers we're looking at are showing us to have a little patience here. Just look at the PPI yesterday. That'll trickle through. That would be the rainbow scenario. After Friday, you can't count on the rainbow, but be open-minded that it might happen. And particularly with kind of that leg sweep this morning, taking out all the stops below the recent low on the S&P, kind of looks textbook to me, as a possibility to see a rally that no one is positioned for. Not, super confident on that, but the setup looks awfully familiar, and I've seen this a number of times in my career.
Yeah, I think you're right. PPI definitely focus, and one of the things that we're going to definitely watch, and you're giving us right now kind of that one of those signs, but maybe you see something else. Is there any other signs that you're seeing that this let up could come in from this recent down move? I mean, we are seeing a pretty bad market breadth out there right now. Is there any other signs that you're seeing other than PPI?
Yeah, look, I mean, everything's flushed. We've almost run out of sellers, Mitch, but that's been that way for a number of weeks on and off. But at some point, you do hit that final seller. I mean, you got, to your point, you mentioned consumer sentiment. It's the lowest. It's lower than the great financial crisis, 2008, 2009. That's kind of unwarranted when you consider, GDP growth. You consider the population. You got 31 million millennials starting housing formation. So to be as pessimistic as 2009, when you had a real credit crisis and we were right at the edge of the cliff, seems a little overdone. The fear and greed index is now at levels you want, historically you want to be a buyer. It's down to 19 today. That's a compilation of a number of indicators. You saw the AAII sentiment on Thursday, 21% bullish. That's below the pandemic lows, 47% bearish. I mean, we had no vaccine, no clue what was going to happen. And people are more bearish today because they're feeling it at the pump. They're feeling it everywhere else. But as it relates to energy, one, you could maybe get a resolution with the geopolitical, but you can't count on that. The one thing that we can count on is production is coming up in the United States. So at the pandemic lows, you had 244 rigs in service. Today, you've got over 727 rigs. And that's down. The pre-pandemic level was 792 right before the pandemic. So you went from 792 to 244. Now we're back up to 727. So that energy's coming back online. Biden's going over to Saudi Arabia to talk to them about producing some more oil. That could potentially be helpful. We'll see. And then you look at many of the other commodities have softened in recent weeks and months, like wheat, like live cattle, like cocoa, lumber, copper, soybean meal, gold, even palladium. They're lower. So, but these things work on a lagged effect until the consumer starts to feel it. And maybe the Fed will have something to say about that. But if they don't, they've got to regain control of the narrative. So if they don't have any good news on the inflation numbers, if they say, yeah, Friday was terrible, we didn't expect that, well, then they've got to say, we're going to pull forward July's rate hike to June. We're going 75 or 100, and then we'll see what happens. Maybe we'll do nothing in July, but we got to get ahead of this if they've got nothing good to say. If they come off a good PPI number, they're going to say, look, this is what we were seeing. This is why we've been a little bit slower. This is going to take a little while to trickle into the consumer, but we're pretty optimistic. Then, that could be fodder for a nice rally. But one of those two things need to happen. Either one, they need to jump on it, or two, they need to say, here's why we didn't jump on it. Look what happened with the PPI coming to a theater near you. Prices will come down. But that's a tall order. And I couldn't even place a probability on the PPI tomorrow after what happened on Friday with the CPI, because all bets are off the table. But I'm open-minded to the possibility, based on DRAM, fertilizer, and shipping, that it could be a nice number.
Yeah, even Vegas didn't want to get involved in those odds, but we won't talk about that, Tom. Now, one of the things that we've been pointing is, what are the signs of potentially a turnaround? But also, let's not get too far away from what we're seeing too. And there could be potential for some of these sectors of industry to continue on the downside action. So is there anywhere you're seeing just weakness coming in, or maybe like today we're seeing energy turn around a little bit here? What do you think, Tom?
Yeah, look, I've been, if you go back, as you know, I run the website hedgefundtips.com, and I post a weekly commentary, and I post a weekly video cast that has a lot of institutional followers. We were pounding the table to buy energy in fall of 2020 when no one wanted it. And that's our nature. We buy things when they're out of favor. We sell them when everyone wants them. We've been sellers of energy for the last couple of months plus, off of those 2020 lows. So everyone wanted energy this year. We're selling into that strength, sold to you. And now I think it could come in. I mean, people are pricing in this perpetual rise of energy in perpetuity. And one of two things is going to happen. Either the production is going to come back quickly enough, either from some breakthrough in Russia, some breakthrough in Saudi Arabia with pumping more, our own production. One of those things is going to happen, or the Fed is going to destroy demand by having to hike to rein it in. And in that case, energy is coming down anyway in the short term. I just think too many people have gotten excited of late. The same people that wanted nothing to do with it in 2020, now that it's up, depending on the name, 200, 300, 400%, now they can't get enough of it. And usually when that happens, the market opens the trap door for the Johnny-come-latelys. So we'd be more inclined to be lightening up on energy and looking at some of the things that are now out of favor.
Yeah, definitely. Now, one of the ways that I wanted to wrap up is I know you always try to help out also the retail trader on out there. So definitely, guys, check out hedgefundtips.com. And one of the things that you do on there, and I really love this, I check it out all the time because I'm a technical fan. So on Friday, you released the indicator of the day video. And so if you guys want to check that out, it's actually in the description below if you want to check this out. And so you put out the McClellan Summation Index. And I think this is an important one to go, especially on a day like today, where, where we're seeing such change in market breadth and it's extreme. So talk to us a little bit about the McClellan Summation Index and how it's used.
Yeah, look, I mean, all of these barometers, as you know, we put out one a day, and I've got a guy named Carter working for me that's now putting out some of the new videos. I don't know if you've noticed that. But what you're finding across the board, and there are like literally 400 or 500 of these different indicators, and they all kind of point to the same, whether it's the McClellan summation, some of the sentiment indicators that I shared with you earlier in this call. All that's telling you is, are you at an extreme? And I don't actually look to what is the definition and what is the calculation. I just overlay it with the S&P 500, because all I want to know is, do odds favor being a buyer or do odds favor being a seller? And nothing works perfect, but when you look at 10, 15, 20 of these things, your favorites, all together, and if they're all pointing to everyone's flushed out, that's usually time to start to nibble and increase your position sizing. And when they're all extreme on the top and everyone is buying, everyone's excited about the market, that's usually when we're lightening up and raising some cash. So whether it's the McClellan summation or any one of the other indicators, we put out one per day, 7 days a week. You guys can check it out with a 60-minute video. And right now, the vast majority of our indicators are pointing to, selling is flushed out here. So what could be the catalyst? I honestly couldn't think about it until I looked at the economic calendar this week and I saw the PPI tomorrow and how high the estimates are. And then I looked at some of my data that I look at, whether it's DRAM prices, fertilizer, shipping, et cetera. And I said, okay, that could be it, but we won't know until tomorrow. And, the S&P 500 is trading at 15 times next year's earnings right now. That's down from 18.6 times average for the last 5 years, which included the last tightening cycle, by the way, Mitch. So, at this level, if you have a time horizon more than a year or 2 years, I think a lot of institutions have to be starting to step in at these levels. They've kind of sold out of everything. We saw in the Bank of America survey a couple weeks ago, their cash levels were the highest since May of 2020, which was near the pandemic, before the vaccine. So I got to assume anyone looking at what I'm looking at, even if estimates come down materially, the multiple's starting to get really attractive. And on a sector by sector basis, you can find things to do.
All right, guys. So definitely check on out hedgefundtips.com, and we'll have you back on. Thomas Hayes, chairman and managing member at Great Hill Capital. Appreciate you like always, Tom.
Thanks, Mitch. I appreciate being on with you. Have a great one.
Have a good one. All right, guys, let's go ahead. Let's continue. That's what it's all about here on Stock Market Movers. Brand new show, guys. So if you guys are just coming on in, I see about 362 of you. Can we get to 150 likes? Let's go ahead and smash it on up. This is the show where we cover the top market headlines, also get to the expert opinions that you guys need to keep that informational edge on out there. So definitely smash it on up. We'll have another interview coming on up, and at 1:45, we'll be getting in with Ivan Feinstein, that serves as the senior partner and chief investment officer and director of research at Tigress Financial Partners. So stick around for that. We'll talk a little bit about Tesla. We'll talk about the overall market. We'll talk a little bit about some traveling stocks also getting crushed a little bit out there. So let's talk a little bit about what's going on in the cryptocurrency market right now. It's just a battle on out there. And one of the things that I think that a lot of people need to kind of look up, terms like crypto winter, the halving. You need to look up the 4-year cycle. A lot of the times it has been seen in cryptocurrency. So I think it's very important. This has really come after a stark fallout in cryptocurrencies. Let's go ahead. I'm going to actually pull up my Benzinga Pro so we could take a look at the Bitcoin chart. And definitely we're still seeing some leakage on out there. So let's take a look at that. Let's see what we're seeing on the chart here. I'm going to go ahead and pull it on up here. I'll put it full screen. Let's take a look here. So Bitcoin coming on down there towards 2233 now. And where could this stop? One of the things that I think you got to really pay attention to is what the retracements have been in the past. So in the past, we have come from around 20,000 and we retraced to about 3,000. Now it's about 68%. So I calculated that from the top and I got somewhere around the 10 to 8,000 range. So that's around the range where I'm going to be looking to dip my toes in BTC. But what happened, right? In the cryptocurrency lending platform Celsius network suspended withdrawals and transfers. And this is not what we want to see as cryptocurrency traders on out there, or anybody that's trying to invest in cryptocurrencies, because this just creates more and more worries that at the time of come, if there's ever, like, let's say a panic sell or something like this, what's going to happen to these platforms, and are we going to be able to actually take out our money? This is why you hear a lot of investors kind of put a worry out there that you just don't know about cryptocurrency just yet. I think this is a moment of opportunity. Of course, you gotta be slow and patient. It could take 4 years for the next cycle to come. It could have been that we broke down in 2022 early, and the next cycle doesn't come back until maybe 2026. We don't know for sure. One thing that you do know is you want to be slow, because it has taken some time to get the stock, or to get Bitcoin back on up to another ramp point. So keep that one on watch. Right now, I'm not so sure. We're going to continue to see the strength here in Bitcoin, and it's just been weakness after weakness. And right now, it's looking like, especially with the market also coming on down, we could be coming on down there closer towards those 10,000 level. We'll see what happens there in Bitcoin. And I'll throw it up to the chat. You guys throw up a 1 if you guys think Bitcoin gets to, let's take it easy here. Let's go to 15K. Throw up a 1 if you think Bitcoin gets to 15,000, and then throw up a 2 if you think Bitcoin can get back above the 30,000 mark by the end of the year. So I'm giving it about 7,000 to the upside, about 8,000 to the downside. What do you guys think there? There's some 1s already flowing through. They would say 15,000 first. We'll see. Manny giving the 0 out there. All right, there's a 2. There's a 2. Someone thinks it can get back up there to the 30K. Brian also. Brian Blockchain. Maybe we need to listen to Brian, but I think it's going to suffer here. And one of the things that I think could also happen, and we're starting to see it already with the apes value, because a lot of you look at the Board Yacht Ape Club and you see the value really coming on down. Keep these on watch. Talk about it with the Moon or Bust guys. Talk about it with the roadmap. How do they see this turning around right now? Because I see it really coming back down and pressuring all that supply that came out. The same thing that happened in specs. I mean, let's just be honest. So we got to keep in mind what could happen in cryptocurrency, and if we could see that continued downside action. Also coming into play, other cryptocurrencies taking that downside. So right now, I'm looking for pullbacks, but I'm not jumping into anything at the moment. All right, guys, let's go ahead. Let's take a look here at our movers. I want to do this often, is take a look at what's the top move of the day, and if we can find something out there, right? We could do gainers and losers, whatever's having a really up day or down day. We can take a look at it and see if there's any catalyst we can talk about here. So I got my Benzinga Pro pulled up here. You guys can get your 2 free week trial. Just hit pro.benzinga.com and get your 2-week trial. You don't even need a credit card. All right, let's keep going. Let's take a look here. What stock's standing out for you guys today? If you guys want to talk about one, definitely throw it up in the chat. We can see our bankruptcy stocks here definitely standing out. But even this pets down 44%. Let's take a look at Dawn pharmaceutical stock up about 108% here. All right, so looks like we got right here. We got a headline here. Day one pharmaceuticals shares are trading higher after the company announced initial data from pivotal Firefly-1 trial. So here you guys are seeing low-grade glioma showed an overall response rate of 64%. So I'm not the best when it comes to biopharmaceuticals. I'm going to tell you right now, I stay away from them as a trader, but that's up to you guys to determine what you guys like. This stock is up 108% and really started the day down there towards 8, making a rise up there to 16. Now has gone sideways here around the 13s. Doesn't look too bad as you're seeing that sideways action, but definitely one of the biggest movers of the day. All right, definitely, Don, I hope I crush hard tomorrow. Hey, Keith, power to you, man. We'll see what happens. All right. Don got also an upgrade this morning. Yes, you can see that here. You get an upgrade. Webbush day one rises pharmaceutical price target to 35. So 35 is a pretty big push there. And Webbush is not one that I would, kind of doubt too much. So we'll keep watching this one. This one could have even a monster close. So take a look at that one. And that's DAWN, Dawn. All right, what else is trading up or trading down today? Because today is one of those days that you could see continued downside. One of them that is trading down now is here Drive Shack. As you're seeing kind of consumer stocks go away, this is the one that does kind of like a copy on Top Golf. It also does kind of some putt action. But here you guys see it down there towards $1.40 and not looking good here. So you could see also Eli taking a big hit. Let's take a look here. Callaway Golf down there towards 2078. You could see some continued weakness in a stock like this. So maybe it's a potential to play some on the downside. MicroStrategy down 22.8%. We know this is a lot based on the Bitcoin news. So big down day there in MicroStrategy. All right, what else is standing out to me? Let's take a look here, see if there's anything else that just stands out right off the back here for me. You're seeing a stock like Save Foods coming on down, not showing any strength there. What else is kind of having a strong or weak day? Let's go ahead. Let's take a look at the sectors and take an overall approach here. How's our SPY doing lately? Looks like we're sideways here around the 377 level. We did get up there towards the 380, but quickly rejected off of those levels. We'll see what happened on out there. Is there any strength coming back into the market? Right now, we're seeing some leakage in communication services. Technology kind of hanging out sideways here. Let's take a look at a stock like Apple. Apple is battling just sideways here. It doesn't really isn't showing strength, isn't showing weakness. It's just kind of hanging out here around the 133s. We'll see if this can hold on. But I mean, 133 has been a huge retracement here in Apple as we've seen it come back here towards these levels. I mean, it hasn't been back here since 2021. It would be in July 2nd last year that it was around this area. So we're definitely seeing some decline in the overall market and continued downside action. Even a stock like Google coming on down there to 2100. Nvidia down 6% on the day as we continue to see tech get hit hard. Salesforce reports after the bell today, and it's already closed up the gap that we talked about in pre-market. We talked about this gap in pre-market that you could see that gap fill in, and boom, you already got it there. Salesforce coming on down. We'll see if they lower the bar or maybe kind of get themselves up on the earnings. But right now, definitely seeing weakness in CRM. In about 5 minutes, we'll be getting into an interview. We'll talk a little bit about travel stocks getting crushed right now. Tesla's 3-1 and a couple of catalysts that Tesla has on out there. And then we'll go ahead and wrap on up with a little bit of ticker time that you guys can throw up a stock. If you guys got one to keep on watch, we'll see what happens there. Keith, I covered that one. We'll see what happens. All right, let's go ahead. If you guys got one, another one you guys want to take a look at. Oh, Keith, you want to look at DWAC? Well, how far can it fall? I'll tell you. The technical price is 0. That's how far it could fall, but who knows if it could actually get on down there. This one has definitely turned around and could take out the lows that you see on the chart. Once that takes out the lows there, it could be all the way back down before all this hype, maybe down there towards 18 or somewhere. But remember, this one went up. Oh, it was holding up here in the 90s and 60s and 70s. So we'll see if this one can kind of take out that low here. Definitely be watching to see when it takes out 3650s. You got a couple of marks there. Now you're really kind of fading on through here. We'll see if that can continue on some downside action. You're also getting an increased volume into that play as you see the RSI down there towards 16 on the daily. Just to kind of show how oversold it's also being pressured. Hut getting hit hard there, guys. The cryptocurrency stocks, right? Cryptocurrency stocks have just continued to come down here and really showing weakness. I remember when I started shorting this one at 14, I got so much hate for this one. But ever since then, it hasn't even gone back towards that 14. It's just been weak. A lot of this was kind of warning signs that I saw out there in the cryptocurrency markets, just not the same hype as we were seeing in the last couple of years. Stocks like Mara could come down eventually to being a penny stock. I mean, this stock was a like a $2 stock back in 2020 before the recent run, and before that was $1. So who's to know if Mara is going to keep coming on down there towards that $1? But definitely with weakness and mentions like we have here from Celsius, the platform, and worries out there from investors in cryptocurrencies, you could see that continued downside action in Mara. All right, so another area where I was looking to potentially maybe see some strength coming into Q3 and Q4 was the industrial stocks, but it hasn't happened, guys. And you got to admit when you're wrong. So I will go ahead and admit it. I'm more than likely, at least from what it seems now, right now, Q3 and Q4 isn't looking like an industrial move. And so one of the things that you have to do is just really be flexible sometimes. You can't just get stuck to your bias. I was looking for industrials to get strong as we saw mentions more of the infrastructure bill. And we've been hearing mentions of things like charging stations and mentions like that, but really hasn't gotten these going. Stocks like even ChargePoint, it started coming back on up. And what happens today? Boom, slacked right back down there towards the 12.55s. We'll see if this can continue going through 12s and actually make it all the way back there towards the $10. But I actually even saw an EV go at my gas station just this prior week. So who knows? Maybe in the long run, these are opportunities to get a stock like EVgo and ChargePoint at cheap valuations. But for right now, it doesn't look like we're getting that infrastructure kind of flux that I thought we would potentially maybe get going into Q3. All right, guys, in a minute, we'll be getting into our interview. Like always, guys, smash the like button. Where we're at on the likes, looks like we got over 420 people here. So definitely let's keep it going. Let me know in the chat if you guys got a stock or a catalyst that's sticking out to you. We will always cover it right here on Stock Market Movers. All right, so let's go ahead. Let's dive into our interview. I think Ivan's ready. As a matter of fact, I know Ivan's ready. So let's go ahead. Let's dive into our interview. We got Ivan Feinstein here. He serves as the Senior Partner, Chief Investment Officer, and Director of Research at Tigress Financial Partners. Welcome on, Ivan. I'm glad to have you on. I've seen you on Pre-Market Prep before, so I'm happy to be interviewing you here on Stock Market Movers.
Thanks for having me on, Mitch.
Definitely excited to go ahead and dive into it. And first thing I want to do is we'll stick a little bit closer towards the overall market here. It's been an extremely tough market lately. How are you seeing the market sentiment, and what's standing out to you right now in this market?
Oh, there's a lot of negativity, and this is a panic sell-off, and it's just a little, I think, getting overdone. I mean, yes, we've had inflation, significant inflation for the first time. They say Friday's CPI at 8.6 hit the highest level in 40 years. However, it's the highest it's been in above 2% in over 10 years, and anywhere near the median level of inflation, historic level of inflation. It's been under 5% for almost that whole 40-year time. So to extrapolate the recent increases in inflation in this year and then take that to an extreme, I think that's what the market is doing. And now it also feels that it's losing confidence in the Fed's ability to stem this runaway inflation. First of all, it stems from one main issue. It's the pandemic. It was the shutdown of production. And at the same time, the government did inject a lot of money into the economy, giving people money to, get over the hump, get over their period of either furlough or unemployment where they couldn't work because of the pandemic. And unfortunately, we've had this shortage of supply and incredible demand, and these factors will correct itself. So I think we're going to look back on this period in time, as we have in the past, anytime there's been panic selling the way we are getting today, as being a buying opportunity, especially across the tech sector and a lot of high growth stocks which I think we will look back, and again, this is a huge buying opportunity in companies like Salesforce.com. I think it's Oracle who's reporting after the close today, and Microsoft, and Apple, and Meta Systems, and Amazon. So, I know it's hard to catch a falling knife, and to quote many people, you don't want to catch a falling knife because you can get cut, but you got to sometimes just hold your nose and dive in, and I think this is the time.
Yeah, one of the things that I think, and I go back to kind of what happened in the pandemic. There's not very often that we do get that V type of bottom, and a lot of traders could have missed out on that opportunity, right? But there's always other opportunities, and it's seeming like now, at least for investors that got in during that time, or maybe after the real V bottom there, this is also an opportunity if you didn't ride that big wave up to come back into names and start kind of positioning yourself in a long-term sense for another bull market. At least that's what I'm seeing out there. But today we're seeing a little bit of some real, it looks like demand destruction in the travel stocks. Let's talk a little bit about that. American Airlines down about 8.7%. DAL is down about 6.7%. Off kind of airlines about like Gold down 15%. We're definitely seeing some hard hits there. Hilton down about 4.5%. A lot of these stocks taking retraces. Airbnb now down there towards 100, almost looking like it could break 100 right now. So what are you seeing in the travel stocks?
Well, I mean, the CEO of Hilton said last week that they are at their highest book level in the history of the company, the 104-year history, and also at very strong prices. And if anybody's tried to book a hotel recently, they see that prices for airline tickets, for hotel reservations, for car rentals are all at almost near record levels. Unfortunately, the spike in gas prices could slow down the consumer spending on a lot of discretionary purchases, but there's been huge pent-up demand for travel, and the hotels, the airlines, and the cruise lines, and the travel booking companies are all benefiting from that. And I still think that the consumer is strong. The issue that we saw a few weeks ago with Walmart and Target were just that they misread consumers' preferences on spending. We saw this shift prior to the pandemic on spending on experiences in travel. It shifted to merchandise and home furnishings that people were sheltering in place and fixing up their place. Now it's shifting back to experiences again, and people were buying apparel and luggage and accessories and makeup and things to go back out to social events, to travel, back to work, back to conferences, back to work events, which we are seeing. And for example, the wedding business has just been incredibly strong and booked because people have to try now to book the parties that were canceled for the 2 years during the pandemic, plus all the new people that are getting married. Weddings are being held almost every night of the week. It's not unusual to go to a wedding on Monday night, Tuesday night, and all on weeknights, which in the past, most weddings were on weekends. So just to meet the demand. So ideally, the run-up in prices is being tried to be head off by the Fed raising interest rates, but the bond market has done a lot of the work of the Fed for it. Unfortunately, gas prices where they are, it is going to have a shock to the system for consumers. However, if people are still going to work, whether they're working remote and they're using Microsoft Office and they need cloud hosting and computer infrastructure. So I think the tech sector is where there's tremendous opportunity right now.
Yeah, so it seems like you're still seeing the consumer still have some cash, not so hurt as some of the other kind of analysts are talking out there. That
right
were
now,
really
the consumer has over $2.5 trillion in excess savings. And by the way, there's record levels of excess cash on corporate balance sheets, and they are consistently increasing dividends and announcing new share repurchase authorizations.
Yeah, the buybacks haven't stopped. Let's go ahead. Let's dive into Tesla now. I want to talk a little bit about it. Recently, we got the proxy statement for a 3-to-1 stock split. First, let's go into just the split. What do you think the split how would that have effect on Tesla?
Well, First, when you get into these several $100, multi-$100 and multi-$1,000 share prices, like with Amazon, the split, you need to start the split to make it, easier for individual investors to buy round lots of 100 shares. However, more importantly, it has a bigger effect on the option market because one option contract is 100 shares. So when Amazon was $3,000 a share, one option contract was 300,000 notional. That's not really accessible to the average investor. So whether you want to buy options to create a position or create exposure, or buy puts to hedge a position, or sell calls or sell puts, it makes the lower share price makes it easier. And now Tesla does have a big shareholder fan base of people who both aspire, either car owners, Tesla car owners, or aspiring Tesla car owners. So I think that in the case there, it does broaden it out to meet the needs of their shareholder base.
All right, let's go also talk about what I saw in the news this morning about Indonesia and asking Tesla to set up an electric vehicle manufacturing plant. And what would this do for Tesla? We know how the Asian countries have some advantages in materials, but this sounds interesting to me. Indonesia asking to set up an electric vehicle manufacturing plant.
Well, the first issue is the bigger the item is, the more costly it is to ship, the more it needs to be locally made. Second is, with different tariffs being imposed on different countries, that every country really wants things made locally for local markets. But the end economic force is that money flows from countries' long capital to countries' long labor. And we've seen that since the beginning of time, really. And so money is going to continue to flow into markets where the cost of production, and by the way, the United States offers a tremendous value in total cost of production. But there are a lot of places that do also have great labor pools, offer low cost production, and also target markets. So I believe things should be made in the markets where they are sold. And we're going to see more of that trend. And we're also going to see, I think, one of the issues in the pandemic, the pandemic that we learned is that to have a overly China-dependent supply chain has caused a lot of issues, both from logistics, both from the rolling COVID shutdowns, and of course, trade tariffs and trade war and trade issues. So I think you will see a lot more things move outside of China and into some of the surrounding Pacific Rim countries for production, as well as production increasing back here in the U.S. You see Intel investing a tremendous amount of money in foundry production to build semiconductors here. So I think we will see a increasingly global supply chain.
Now, one of the things that we recently seen is China also reimposing COVID restrictions just weeks after, it lifted that strict lockdown. And another thing that we got from Tesla was recent numbers that showed slowed down production in the Shanghai factory. Do you think these recent lockdowns also will continue to affect production? And
absolutely. China has a zero COVID policy. So as soon as they see any increase in cases, they go to a lockdown because the three things that seem to work are vaccines, masks, and distancing. So distancing is the lockdown, reducing interaction. So that is one thing that they have very strongly imposed it's caused a lot of issues in China as far as economic issues and shutting things down, and even some issues of people just being stuck at home. And it's only so long you can be stuck at home. So yes, but that's how they seem to want to choose to be the quickest way in their view to deal with stopping the spread is this immediate lockdown.
And lastly, I think we could just go to the overall look of Tesla. How do you see Tesla moving forward in, let's say, the next 6 months to a year?
Well, I really am a big fan of the company, the car, and its CEO. but I think there's much more value in the auto sector in GM and Ford. So, I mean, I think if you can stand the volatility and the valuation of Tesla, certainly the pullback from its high, it's almost half of where it was a few months ago. It's a buy, but my number one pick in the auto sector is GM, followed by Ford, followed by Rivian.
I like it. I like it. We'll definitely keep watching. I need to drive one of those Ford Lightnings. We'll see what happens there. Ivan Feinstein serves as the Senior Partner, Chief Investment Officer, and Director of Research at Tigress Financial Partners. Thank you for joining me on Stock Market Movers, and we'll definitely have you back on.
Thank you for having me on. Have a great day.
All right, guys, that's what it's all about here on Stock Market Movers, getting you the expert opinions that you guys need to keep that informational edge. So tell me what you guys thought about Tesla in the comments after the show. We got about 2 minutes here, so only 2 minutes to maybe touch a stock or two. First thing I need to do is, of course, let's take a quick look here at the overall market. What are we doing now? We're at 379, seeing a little bit of a bounce back into this market. We'll see if we can get a good bounce back. I would say a close above 380s would be a little bit of some kind of resting period there for the bears, and you would see a little bit of question from the bears and the bulls getting a little bit excited if we could get a little bit of a rally. We'll see what happens there. I'm seeing a lot of mentions in the chat. What else we got? Also see kind of mentions of the big mover of the day. We could talk a little bit about it. Redbox. I don't know who's getting the DVD business going here, but definitely we've seen some big lifts. It tried to get back above this 17 multiple times, really starting to fail now. Isn't really moving off of a major catalyst, at least I would say. And this looks like it is turning a little bit around there at 17s. But like always, we'll see what happens. I saw mentions of Reddit on out there, high short interest float. So keep this on watch, guys. Redbox has been making big moves. And we talked about the other one that was making big moves on up. So stick around, guys. That's what it's all about here on this show. We're going to keep going through the hot stocks, the sectors that are hot right now, what is moving, what is not. We'll try to paint the picture of the rotation. We'll touch headlines and get to the expert opinions that you guys need to keep that informational need right here on Stock Market Movers with Money Mitch. I hope you guys enjoyed today's show. Please let me know how I can improve the show, because that's what I really want to do. This is a brand new show. This is the second show ever. So if you guys want feedback to give back to me so that I can make improvements to the show, I'll definitely do so. What is it? You guys want to see more live trading action? Of course, this isn't about that, but we can go and take a look back at what's happened. We could also touch different experts. If you guys got an expert you guys want to see on right here, hit me up in the comments after. I'll make sure to go ahead and reach on out and get them on right here on Benzinga. We're going to keep it going, guys. We're going to get you guys over now. We'll get you on over to some moon or bust action. I hope you guys are ready to see some moon or bust action. Let me know in the chat if you guys are cryptocurrency fans. And looks like Bitcoin heading below 20K and the Celsius shutdown will be the topic. And Decentraland's co-founder interview? Man, I'm not going to miss this. I love Decentraland. I've played it a little bit, so check it on out, guys. That's going to be up next there at 2 p.m. So I'll get you guys right over. And we'll see you next time right here on Stock Market Movers.